When you have a 30% unemployment rate, and the second that people start to foreclose and short sale, the property values in your neighborhood, the property values in my neighborhoods are going to plummet. So we're gonna see how well that does. Oh, there goes my letter. Oh gosh. Okay then, plans changed. Hey, what's up friends? Welcome back to the VIP channel. I'm hanging out here back where I tuck my wood and my trailer behind my shed because it's just less windy and I want to be outside because that. So we're gonna hang out outside. We're gonna have a bit of a walk and talk, and if you can hang with me until the end of the video, we are going to head down and collect the mail at the single coolest mailbox, best trip to a mailbox you'll ever go through. So I want you to stick around for that. Guys, if you are hoping for solutions financially, this is the channel to get it from. Please go ahead and subscribe to the channel and drop a thumbs up on this if you want us to continue talking about what's happening now, what you can do about it, and how to stay safe, and how to even create lifetime wealth in the process, because that's what's coming. And that has a big part in what I want to talk about here today, which is the housing market and why I think we are facing the biggest crash of our lifetime, even though the lenders really aren't as much to blame this time around. There are a lot of conversations floating around, people who have defended the underwriting guidelines of the banks and the lenders this go around, meaning that you have a much lower loan to value, 80% or less, and there's a perceived equity position in the house in order to get the loan you wanted, or much lower debt to income ratio where you had the ability to afford the payment that you were getting into at the time you got the loan, or much better credit scores, so you had shown a history of being credible and reliable about paying your balances. So a lot of reasons to credit the banks in adjusting from the last downturn, which was by and large the reason the housing bubble popped in 2008 and 9. However, in the end of 2007, November, I actually purchased a fourplex for $315,000. I was qualified at the time. It wasn't a liar's loan. It was a qualified loan. And by May of 2008, 6 months after I purchased this property, this fourplex multi-unit, which is what you think you're supposed to be doing when you're getting into real estate investing, somebody came and purchased the two properties directly next door to me for $135,000 a piece. Now, those fourplexes next door happen to be model matches. If you know anything about how appraisals work and how the property value is determined, it's calculated by using comparable sales. And those comparable sales, known as comps, are only worthwhile if, in fact, the property has sold recently in a specific proximity and is a similar likeness to the property that is being appraised. So in my case, I had two model matches that were sold yesterday next door, which made my property value immediately $135,000 6 months after I purchased for $315,000. That's a $180,000 loss almost overnight. Now, I held on to that property as long as I could. Okay, I had a couple of options just like everybody else did back then. Keep it, maintaining a limited cash flow, or contemplate short sale or foreclosure of the property. Now, I did not want to foreclose on that property because I could afford it. I could keep paying. It was cash flowing minimally, but I didn't want it anymore. Obviously, who wants a property that's worth $180,000 less than they owe on it? I certainly didn't. I didn't have to put money down because they were doing 100% financing on non-owner occupied properties at that time, which was absurd. But nonetheless, even if I had put 20% down, I wouldn't want a property that was suddenly worth substantially less than what I owed. And so it began to seem appealing to me to contemplate doing a short sale where you essentially find a buyer who's willing to pay less than what is owed on that property, and the bank accepts that reduced sales price. That's essentially how a short sale works. Now, in order to achieve a short sale as a borrower, as a homeowner, you have to essentially demonstrate to the banks a hardship, meaning you have to start missing payments on that balance. And if you start missing payments on that balance, the bank is willing to negotiate. If you're paying your bill on time every month, why would the bank accept less than what you owe? They're just going to continue to accept payments from you. So I made the toughest decision of my life at that point in my career, which was, I'm going to short sell this. I did it based on the Barack Obama administration providing a forgiveness package whereby typically I would have been taxed on the deficiency, meaning if I bought it for $315, short sold it for $135, I would receive a 1099 in the mail for income tax on the $180,000 difference, which would have cost me many tens of thousands of dollars in taxes. Because of Obama's stimulus and forgiveness, that factored into my decision. I'm thinking to myself, hey, I can get away from this property with nothing more than some damage to my credit, which was essentially true. Looking back on it now, I cost myself millions of dollars. Here's why. At the time, my thought was, listen, I'm a credit expert. My specialty is actually getting credit recovered from hardships. I'll just repair my own credit, and that's exactly what I did. Within 1 year, my credit scores were back up over 700. The problem was a bank didn't want to lend me money. No bank wanted to lend me money for 3 years because mortgage rates are considered the worst derogatory that you can have on your credit. So these 30 days, which rolled into 60, then 90, then 120-day lates, you know, these things were gobbling up my scores. And then after my scores were recovered, they still show up. Okay, so bottom line is this. I was sidelined in the best buying opportunity of my lifetime thus far, 2009, 10, 11, 12, which means I lost out on millions of dollars. And in retrospect, if I could go back and do it again, I probably wouldn't have short sold that property. But it's coming again. When you have a 30% unemployment rate and a whatever percentage underemployment rate, and people cannot afford their mortgages any longer, people will start short selling and foreclosing. That's my prediction. For selfish reasons, I hope that the opportunity is there. For empathetic reasons, I am terrified for many people. And the second that people start to foreclose and short sale, the property values in your neighborhood, the property values in my neighborhoods are going to plummet, which leaves substantial discounts on properties for both you and me. That's why you have to focus on the 3 C's of proper banking and borrowing: credit, capital, and cash flow. You have to be focusing on how you can maximize your credit and your borrowing strength so that you can get access to the right types of capital at the right time, so that you can then deploy that capital to purchase assets, income producing assets. For me, that's focusing on buying discounted businesses and focusing on buying discounted real estate. I hope it's the same for you, because it will create lifetime wealth. And it's not just the underemployed or the unemployed that are going to factor into this. It's going to become a supply and demand factor. The more and more people that end up losing their homes to short sales and foreclosures, the more properties are available. Even people with money can't buy a flooded marketplace, which continues to reduce the price tags of these properties even further. So be ready, folks. Stay tuned to the channel. You've got to become a subscriber to this channel. I think this is coming. What do you think? I'd love to hear it in the comments below. As always, please join the conversation. Let me know. You think I'm wrong? It's okay if you do. I'm just guessing. Nobody knows what's going to happen right now. But that is my 2 cents for the moment. Happened before, I think it's coming again, and I think you can benefit from it. The way you will benefit is by watching our other videos. Those are all still relevant on this channel, folks. Just because of coronavirus, just because the economy is changing, changes nothing about the content that I've been putting out the entire time on my channel. So please go through that stuff. You have the time right now. You're sitting at home. What are you doing? You're wearing sweatpants. Come on, watch more videos. Click the videos that come up at the end of this. And now for the fun part of this video, if you want to stick around, I'm going to go get my mail at, it's the single best drive to a mailbox you'll probably ever experience. We're going to go 50 miles an hour. Can you go 50 to get your mail? Let's check this out, guys. Come on, join me, won't you? Windy day, but whew, can't beat that view. All right, guys. Let's get in the Polaris. I think I called it a Polaris for the longest time. Drove my friends crazy. Polaris has this feature where unless your seatbelt is buckled, the machine won't go above 15 miles an hour, which is probably good. Let's roll, baby. Oh man, that's fun. We'll see how well this built-in gimbal works on this new Hero 8. This is the GoPro Hero 8. And they have a built-in gimbal that's seems pretty sweet. So we're gonna see how well that does. Oh, there goes my letter. Oh gosh. Oh boy. Well, I might need the Polaris for that one. Okay then, plans changed. A little more excitement than I was planning. Trying to mail that letter. Oh, there's the safety feature. Better put on the seatbelt. Okay. Windy day. Oh no. There it goes again. Woo! Got it. That's how you get exercise during the pandemic. Just let your mail blow away. I'll throw this back in there and then we'll head home, guys. By the way, if you choose to sign out, I understand. Much love, much health, and much cash flow, folks. We'll see you on the next video. If you want to, you can take the ride with me home. You don't have anything better to do, right? Let's grab mail here. All right. How about that view? Those are what they call the collegiate peaks, named after elite schools. All right, guys, let's take the shortcut home. What do you say? I think we almost hit that bird. How about a little off-roading, huh? No friendly waves, not today. All right, guys, well, I can't think of a better way for us to have fun together during this crisis. Thanks for joining me. I will say, that's one way to get your mail, right? We'll see you on the next video, guys. Like I said, much love, much health, and much cash flow. We'll see you on the next one. Take care.